Hello, everyone. My name is Alan Dick, and on behalf of my fellow co-founders, Scott Silverman and Veronica Sontsev, as well as the rest of the entire CommerceNext team, I want to welcome you to today's webinar. Today is Wednesday, January 31st, 2024, and our topic this week is 2024 Digital Retail Forecast, Opportunities, Challenges, and Strategies. Before we go any further, I'd like to welcome and thank today's speakers, starting off with Sucharita Kodali. She's the VP and Principal Analyst over at Forrester. Sarah Rasmussen, one of the most accomplished and informed retail executives I know. Simeon Siegel, he's a Managing Director, Senior Analyst, Retail and E-Commerce at BMO Capital Markets. Mark Miller, the VP of Competitive Intelligence Leader over at Synchrony. Thank you so much for taking the time to be with us today. Thank you as well to Synchrony for sponsoring. We couldn't bring these webinars to you without the support of our sponsor partners. It's been a real pleasure working with them, especially Jason Farmer. Thank you so much for helping us put this together. I also want to thank the CommerceNext staff, Veronica, Scott, Jill, Robert, and Maeve, who are all off screen helping to make this webinar a success. Maeve's feeling a little under the weather today, so I hope she gets better soon, but she'll still be taking care of your information and issues over in chat. But of course, and as always, thank you most of all to you, the audience, for being with us today. We really appreciate it. Before we go any further, I want to mention that our next webinar takes place on Wednesday, February 7th. The topic, Unlock Your 2024 with AI, the Playbook for Commerce. Jill Dvorak, our Chief Content Officer, will be leading a panel discussion with executives from Solo Brands, Steve Madden, Spark, and Session AI. You can register for that session by clicking on the link in chat. Speaking of things coming up in 2024, remember it's never too early to register for our big event, the CommerceNext Growth Show, June 11th to 13th in New York City. Sign up today. You could win a pair of tickets to see the Mets versus the Marlins game on the evening of June 13th. And again, we're taking care of you here at CommerceNext. There's an added advantage for our webinar listeners. Register today, and we'll enhance your winning prospects by counting your entry twice. It means you get twice the chances to win. So go to commercenext.com/conference or take a look in the chat for the link to learn more and apply to attend. And finally, just want to remind you that our YouTube channel has over 370 videos covering topics including acquisition, retention, leadership, retail technology, and so much more. You can click on the link in the chat to visit our YouTube channel to learn more. Here's today's agenda. Sucharita Kodali is going to be reviewing the findings from our latest industry sentiment survey. After that, we're going to ask you what you think you're going to be looking forward to or dreading in 2024. And finally, near the bottom of the hour, we'll have our expert panel discussion where we'll dive into the more strategies and tactics you can use to make the most of 2024. And of course, take all of your questions, which I urge you to send in to us. This is a great panel to pick their brains. All right, before we bring Sucharita up, just want to note that we're recording this webinar. We're going to make it available by tomorrow. For those of you that are new to our webinar series, and I think there's a bunch of you on this one because we have got some pretty record-looking registrations over the last year on this one, let's take a moment to review the functionality tabs at the top right of your screen. There are 4 tabs: Chat, Q&A, Polls, and Handouts. Now, use the Chat tab when you want to chit-chat with other attendees. Use the Q&A tab when you want to ask the speakers a question. The Polls tab is where you can participate in polls and review the results. And the Handouts tab is where we have today's presentation and other materials available for you to download. One important thing to remember, you can show your interest in a specific audience question by upvoting it. That really helps me prioritize which questions to present to the panel. So if you like a question, feel free to upvote it. And lastly, if you're watching this on the replay, please note that the handouts are available by clicking on the highlighted document icon in the video player. And with that, let's welcome Sucharita to our virtual stage. Sucharita, how are you?
Good. Thank you for having me.
Oh, absolutely. Some of our listeners may know that you have the honor of being the lead speaker on the very first webinar we did. And I was looking at it. It was back in 2020, right at the start of the pandemic. So yeah, always great to have you on board. Always love to hear your comments. So with that, I will turn it over to you, Sucharita. It's all yours.
Great. Thank you, Ellen. So some of you may know that we had bugged a number of you to get responses on your attitudes toward the coming year, as well as what happened for holiday Q4. So what I'm going to do is walk you through some of those findings. For those of you who graciously filled out the survey, you've already seen these, but now you get to hear me actually walk through the results and give my commentary on what I think is happening here as well. So just a little bit of background. We did this survey a few weeks in January. It was around the National Retail Federation's Big Show time period. And we'd asked retailers and consumer-facing brands about two issues. One is, how did holiday sales do? The other was, what's your outlook for 2024? Because that's, I think, really a big question. There is a lot of uncertainty in the market. There's a lot of uncertainty in retail, where there are questions about how the sector and the verticals and the various verticals are going to perform in 2024, how you should be planning based on some of those, based on the market landscape. Over 100 companies responded, so we're always happy when we can see a response rate of that level. So let me walk you through some of the numbers here. So we had big buckets because we wanted to make it as easy and accessible for respondents to give their thoughts on what happened and what will happen. So what we did is we just asked in, kind of large buckets, how did Q4 in 2023 do versus the prior year? And what we saw was about 56% of respondents saying that the numbers were positive, and 34% saying the numbers were down. Now, just to frame those stats, MasterCard was one of the few data kind of data resources that shared what their stats were for online holiday sales, and it ended up being about 6% growth for this past Q4. How that fares here, I would say if I had to bucket it, it would be a little bit higher that this respondent set performed in Q4 versus the MasterCard set, and some of that could be due to some of the verticals as well as the composition of the different retailers. Now, one thing that I want to share with you is that back during the Great Recession, we actually asked this same exact question, almost of a similar composition of online and digital merchants. And we wanted to phrase the question as similarly as possible and the response buckets as similarly as possible. What is interesting is that compared to the Great Recession, these numbers are I would say they're in the ballpark of statistical significance, or in terms of being similar. So whereas this past holiday season, we saw 56% of respondents with numbers up, you saw 63% back in back in 2008. And what is interesting is that the percent of merchants back then who had double-digit growth numbers was higher. So those growth rates, not surprisingly, were higher back then. We're coming off of huge growth rates during the pandemic, so those growth numbers are going to be a little bit softer. Now, when we look at who performed better than others, we looked at different cuts of the data. We looked at verticals within retail, such as apparel, footwear, accessories, beauty. We looked at brands versus multi-category retailers. But the one sector that stood out to me was the breakouts by size. So that's the data on the left side of this slide. And when you look at the largest merchants, so those that are generating more than $250 million in e-commerce sales, they're the ones that seem to have some more softness in their business. So they are less likely to say that their numbers increased and are more likely to say that their holiday sales decreased. So if you're a larger e-commerce merchant, if you're outpacing any part of retail, you're doing very, very well, because many of your peers are not. Now, in terms of expectations continue to remain generally positive. So that is the data on the positive and very positive on the left-hand side. And when we look at it again by who's positive, you can see again the far left data, the smallest merchants, those that are generating less than 50 million in digital sales, are the ones that are most likely to be anticipating um, positive outcomes in 2024. The larger merchants, less likely to. And often that tends to be correlated to if you had bad sales, you're usually that momentum carries through in the quarters ahead. 42% of respondents say that they'll invest more in 2024. I always think that investment levels are also a good measure of how optimistic a merchant is about their outlook for the coming year. And what we have here is the sum of those respondents that said that they're going to be somewhat aggressive or very aggressive and growth oriented with respect to where they're going to invest. And that could be hardware, it could be software investments, personalization, AI, et cetera. And again, when we look at breakouts, some of those smaller merchants, again, are the ones that say that they plan to invest more. So on the left-hand side, those merchants generating less than $50 million in sales are more likely to be aggressive, and those that are the largest, more than $250 million, tend to say that they're going to be more conservative. Now, many of those that are more cautious, the respondents that were cautious, also filled out some open-ended responses about why they felt the way they did, or what were the sources of some of their concerns, or what are they going to be doing in the year ahead. And we had a range of different thoughts, everything from inflation being lower to the fact that a number of merchants are really focused on tactics and wanting to make sure that they are doing the best from an execution and a conversion standpoint. They're looking at profitability above all. So they're really evaluating those things like their free shipping offers and their markdown strategy and their return strategy to really get their profitability in order. They're reevaluating, we heard this over and over again, their CAC and their marketing mix, particularly to make sure that they're getting new customers and incremental shoppers. Another theme that came up a number of times was the election. And this is something that we've heard before, is that in an election year, there's particularly greater uncertainty than there is in a non-presidential election year. So what I thought I would do is I would pick a slide from the archives, a blast from the past about the 2016 election. And this was a survey that I did after the 2016 presidential election, which you'll remember was the Trump-Clinton campaign. And that was probably a period of most uncertainty, more uncertainty even than we have now. And our question was, following the outcome of the election, we asked shoppers, do you expect to spend less? And what's interesting is that 32% of people said that they expected to spend less. But when you look at overall holiday sales numbers, virtually nobody spent less. It was as much, if not more, than it was in the years prior. So I think that what we can conclude is that there's a lot of cognitive dissonance here, and that people will say that they're nervous and that this is going to cause them to borrow and not, kind of spend. But the truth is that that behavior doesn't actually end up being reflected in retail numbers. There are a number of things that I do think are important to also keep in mind when we think about the macro factors and the reasons to stay positive. The truth is that inflation rates are coming down very quickly from their highs a year ago. Well, they're not necessarily coming down quickly, but they have come down relatively quickly within the last year. Unemployment continues to remain low. That spike that you see in the bottom left was the pandemic spike, and as you can see, our numbers are relatively stable compared to pre-pandemic levels. The Fed funds rate is relatively low compared to historic averages. That big spike on the left-hand side was like the late 70s, early 80s, when the Fed funds rate was particularly high, and inflation was really, really high. But when you look at it now, even our little spike is relatively modest compared to where things have been in the past. Average wages are up, and retail sales are up. So hopefully that gives many of you reasons to be positive in 2024, and hopefully you will be able to employ some of those conversion tactics that we'll be talking about on the webinar today. So with that, I will hand the mic back to Alan.
Brilliant. Thank you very much, Sucharita. Appreciate it. We'll bring you back up here in just a few minutes. All right. So let us move forward. All right. So like I said, they're meant to be interactive. We're going to go right into our polls now. Now, last week on our webinar, I asked you to give us your outlook on the retail environment for 2024. Now, while roughly 61% of you were optimistic, over half of you also noticed that there were potential challenges to be faced. And so in light of those results, I want to take a deeper dive into both why you are optimistic and what challenges you think still remain. With that, we will open up our first question. First question, what fuels your optimism for retail in 2024? What fuels your optimism for retail in 2024? And you can choose up to two of them. Is it advancements in AI and technology? Is it improved economic conditions? Maybe you're going to deploy a new retail strategy or program, something internal to your company that you're going to be optimistic about. Perhaps there's just increased consumer spending in your market, more of an external factor. Maybe there's something else I missed. So those are the options. Which take a moment, take a look at those. I'm going to head over to the polls here. All right. Yeah, interesting. Real interesting. So improved economic conditions are taking a nice early lead here. 37% of you are there. It looks like it's a tie with advancements in AI and technology, or you're going to deploy a new strategy or program. So that looks like those are the number one and number two and three issues there. Outstanding. All right. Let's move right along. All right. Let's look at what's causing you concerns. So what's fueling your pessimism for retail in 2024? And again, you can choose up to two. Is it that you're unable to take full advantage of advancements in AI and technology? Are there uncertain macroeconomic conditions? Maybe it's increased competition, or maybe it's decreased consumer spending in your specific market, or maybe it's something else. Let's take a look at what's going on here. Uncertain economic conditions are taking 33%, and then it's a two-way tie between increased competition and decreased consumer spending in your market. I was wondering about that. And lastly, it was unable to take full advantage of advancements in AI and technology. All right, very good. Before we go any further, before we go to our last poll question, I just want to remind you that our next webinar takes place on Wednesday, February 7th. The topic is Unlock Your 2024 with AI, the Playbook for E-commerce. We've got Jill Dvorak, our Chief Content Officer, leading the panel discussion with Solo Brands, Steve Madden, Spark, and Session AI. That link should be over in the chat for you to take a look if you wanted to register for that one. And the question Jill insisted I ask everybody is, what specific business challenge will you tackle first with AI in 2024? What's the first one? Are you going to go after those marketing channels like email or SMS? How about on-site personalization? Maybe you're going to turn that over to content creation like on-site copy, creative, video, and so forth. Maybe you're going to improve your customer service department. Are you going to turn it loose on your data analytics and measurement? What about on-site search? Is that a priority? Finally, if there's something else we didn't think of, again, put that in the chat so we can take a look at it. It's kind of across the board here. Looks like the number one response is content creation, followed by on-site personalization and data analysis and measurement coming in. But everything's kind of picking up some wind there. So good. All right, perfect. I appreciate that. All right, we can close that poll. And with that, let's bring up our illustrious panel. Hey, everyone. Oh, we're getting questions here. This group is on fire here. Perfect. All right. Perfect. So let's do this. Why don't we get everyone to introduce themselves? Sarah, why don't we start with you?
Hi, everyone. I'm Sarah Rasmussen. I've been in retail e-commerce for a few decades now. Happy fiscal new year to all of you.
And a happy fiscal new year to you as well. I know everyone, that will be my next year's card for the new year. Happy fiscal new year to everyone. Simeon, in blue background that if you lean back will absorb you and make you disappear from the screen. How are you doing today?
You just can't see my fiscal champagne. That's what it's hiding.
I cannot.
Hello, everyone. Simeon Siegel. I'm at BMO Capital Markets. Good to be here. And I don't remember what the question I'm supposed to be answering is. So
who are you?
My favorite color, and I get to analyze the constantly evolving change of the retail sphere from a analytical perspective. So I'm glad that AI taking over data analysis was so far down on the summary, because that would be taking over me.
Nice. Ah, very good. A little job protectionism there. Very good. No bias. Mark, last but not least, and by the way, thanks again for sponsoring the webinar. We really do appreciate when you guys do that. I like that you've kind of taken the lead here on some of our more strategic and forward-looking webinars. So definitely appreciate that. Mark, what do you do over at Synchrony?
Sure. I mean, I wish I could take personal credit for that, but I'm happy to
go
be
ahead.
here. So yeah, I lead competitive intelligence across the board at Synchrony. So of course, we're the largest issuer of retail store cards. So we work with a ton of different partners, and it's my job to monitor the competitive landscape and make sure that we're offering the right products and services for our customers.
All right. So we kind of laid the foundation there. I want to build, my first question to the group is, I kind of want to build on what Sucharita was saying. University of Michigan recently reported that U.S. customer sentiment just made its biggest 2-month jump since 1991. Unemployment is near its lowest point in decades. Inflation has slowed down. Wages have grown faster than prices. Stock prices have surged. Sucharita announced that the grade 5 session is over, so that's done. I mean, it seems like we have nothing to worry about, right? I mean, we're all good. There's really no point in this webinar, right? I mean, we can all go home early today? No, I'm seeing smiles. Okay, so clearly I'm wrong there. Simeon, you have the broadest smile, and I want to see if that's a good indicator that you've got something to say on that. I guess the real question to the panel is: there's a lot of good news, but there's also some pessimism out there. I'd love to know what you guys are thinking. Like, what are you most positive about? What are you most negative about?
So first of all, I was hoping that's how you were going to introduce me. If I was going to be Simeon Siegel with the broadest smile, get as many S's in there as we possibly can. So listen,
that would be super silly as so that you've got the smartest smile of this group. Sorry, I can't help myself.
I think that, listen, I love what Sucharita said. I think at the end of the day, we love focusing on consumer sentiment. We love things like NPS and hearing about what people want to believe. But there's nothing more powerful than how people spend. How people spend is much more important than their intent to purchase, or as they describe it. I don't know about you, but every time, I hate to throw this out, every time I do a survey, may or may not have my actual thoughts by the time I get to the third page. So I think that there is something to the fact that revenues are the indication of what people actually want to spend, because they already did it. And people have been spending. Healthily or not, people have been spending. And so I think when we look further out, there's a lot of macro out there. But at the end of the day, people are voting with their wallets, quite literally.
Yeah, absolutely. Sarah, what's your take on everything you've just heard? What are you optimistic about? What are you pessimistic about?
Yeah, I'm going to change my answer from our prep session a little bit, but also kind of riff off of what Sucharita said earlier and Simeon just said, getting to voting. I've been in e-commerce for a long time. I've been in retail for a long time. Do not see an impact on election years. Customers are spending. Red states, blue states, outcome, and even as we've had like 2 crazy turnouts in the last 2 midterm elections, no impact. So I was a little bit tweaked when I saw that the survey came back of economic concerns, being a concern, economic uncertainty being a concern, because I know people are thinking election in that, and it's not the thing. Don't build your October, November business thinking that something's going to swing one way or the other that way.
Before I get to Mark, I just the thought just crossed my mind. If in fact we were in a vibe session and it really wasn't like the money was being spent, we just didn't feel good about it. Is this a case where consumers are clearly doing one thing and telling us another? But does it almost become, does the belief become the reality? Like, we had a vibe session. People, things were going well, but consumers are constantly telling us they're unhappy with things. And you can see it along, political lines or, election lines. Like, it's just really weird. At some point, that actually has to have some sort of impact, or just doesn't it? Is it just invisible, Simeon?
Yeah, I think that at the end of the day, the beauty of consumer is that we're all consumers. So every one of us in this Brady Bunch boxes over here, right? We all have a job, but we also all consume, and we might be rational as a people. We're emotional as a consumer. And so having a conversation around how do I'm incorporating all the external factors of my life is a very rational conversation. But when you need a pair of Nike sneakers because you wore through them, you're sort of that rationality starts flying out of the conversation. And that's what we see. And that's why I bring up revenues. Revenues are, to be very clear, revenues are not an indication of company health. They're an indication of company size. The same way that consumer spending over holiday is not an indication of consumer health. It's just an indication of did they buy something. And so I think, to Sarah's point, it's a lot of externalities. We talk a lot about things at the dinner table, or specifically we don't. But when you walk into the store, that falls flat. I mean, Alan, you and I have had this conversation earlier. The notion of an activist consumer is a really nice thought. It just doesn't really exist. The largest, think about like all the various versions of sustainability and different conversations we've had vis-a-vis product, and then look at who the largest businesses in the world are. And so I think that at the end of the day, dollars spent is going to be the measure to watch. And that doesn't tend to be impacted by simply how are we feeling.
Mark, let me fold you in here. What are you thinking here?
Yeah, I mean, so on the positive side, I mean, I do kind of echo the sentiment. We hear more economists predicting a soft landing and expectation of rate decreases. And, is that really going to affect the customer, the consumer, and how they spend? Maybe in the sense that it should give them more spending power. So more things are more attainable. So, I mean, that is, one positive we can take out of it, even if we kind of say that, kind of try to distance the consumer from, overall macroeconomic trends. But I do think we need to remember on the negative side too, that, prices are going to remain high. So lower inflation doesn't necessarily mean that costs are going to come down. It more means that they're going to stop rising so much. So consumers are going to continue to deal with those high costs. They're going to continue to deal with high interest rates on credit cards that could even get higher and higher, depending on how things work out in the regulatory environment. And then we're also adding student loan payments back into the monthly budget. So when we think about the ability of people to spend, like, yes, they're still going to want to go out and consume, but some of that ability could be a bit hampered.
Mm-hmm. One of the things we talked about on our prep call for all of this, and Simeon and you're probably going to get into this a little bit later, so I'm a little early on this, let me know, but you're saying that this is the year of execution where, micro is going to trump the macro. And I kind of want to build off of that. Do you want to explain that theory of yours a little bit more?
Sure. So I was touching on this a little bit. I think that the sector allows for great headlines, and it allows us to cluster. And what that means is it's very easy to point to high income versus low income. It's very easy to point to certain regionals. It's very easy to point to weather. Like, at the end of the day, it's very easy to tell a story. And for the last 3 years, those stories have made a lot of sense, because beginning of COVID, there was no revenue. A little bit later in COVID, there was no inventory. Then there was too much inventory. It was all about rising and receding tides. It was all about all boats. And it didn't really matter if you were good at your job. As a retail operator, we all either did great or we did really poorly. And so what it meant was being a really good executor did not make you outshine the coaster. Those who just coasted along. Those who coasted along benefited from a collective raise in pricing power because there was no inventory. And then reverse. What's happening right now, and this is what's so interesting about going back to the revenue comment, is despite the rhetoric to the contrary, we're seeing companies sell the exact same thing to the exact same people, see exactly differing results, and that's a really good thing. And so over the past quarter, you watched, not this isn't picking on companies, but over the past quarter, we saw Michael Kors see revenues down, Coach see revenues up. That's a great example of companies that sell the same thing to the same people, and yet they were different. And there's a whole list of these pairings that you can look at. And so what that says to me is, it says, listen, if you're a really good operator and you're an executor, then that's great. Why? Because running a retail is very hard. Running a retailer means you're supposed to predict demand, and that's a hard thing to do. But for the last 3 years, you had to predict supply. You're not supposed to have to predict supply. That's a different job. Now we're back to predicting demand. And so what I think is those who are able to know their consumer really well and predict demand, it's not to say it's going to be easy. It never is. But it actually, you see, it is worth, again, being a strong operator. And coasters and those that just benefited from the macro, those I think are going to find a much harder time.
I agree. Sucharita, would you agree this is the year of the operator? Sarah, I mean, I'll go Sucharita first, and then Sarah, I'm going to kind of come to you as the retail perspective on this, and then we're going to start hitting some of these really good questions that are coming in. So, yeah, Sucharita, is this the year of the operator?
Yeah, I mean, I would argue that every year is a operator year in retail, because you can't thrive without a strong execution on every part of the business. But this year in particular, I do think that what's unique is the fact that there, as you saw, kind of, it's almost bifurcation. Like, some are doing well, some are going to spend more, some are expecting harder times, and they're going to spend less. And, kind of, especially if you're in that group that is spending less, or you're anticipating hard times, you're going to retrench, and you're going to focus on every single line item. What is every single employee doing, and are they delivering everything that they possibly can, and according to the expectations you have. So is that more than in the past? I think so, because I think in the past, everyone was just sort of thinking about customer acquisition, and not necessarily thinking about incrementality in the smartest way, or not necessarily thinking about, I mean, you look at, if, Google paid search is still largely sponsored search terms. I mean, that's the heart of non-incrementality. So hopefully more of that will change.
Sarah, from an operator standpoint, you have quite a bit of experience with this. How do you get a team that maybe has been living a little bit off the fat of the lamb, so to speak, and now has to start operating a little more leanly, a little more efficiently? How would you address that? What would you, if there's people on this call that may think they're in that situation, what would you advise them to do? How do you get them to get that operator mentality back? Is it a get back to basics thing?
Yeah. I mean, I think what we're seeing at the end of, fiscal 23, right, with the rounds of RIFs going on, is retailers are telling their teams they have to do more with less. I think there are an enormous amount of data and tools that are being underutilized. Enormous amounts of signals that the customer is sending a retailer that either pushed aside or just not able to be measured and quantified. And so when my advice to any retailer that's has to do more with less is focus on what matters most, obviously. What are those key conversion points as the customer is entering the site and driving on through to purchase? If that means that your customer's experience is totally changing from something you once knew, so I'm going to say the traditional cone-shaped funnel to now a hockey puck, if you will, of the customer comes in from a social channel and is doing everything on that product detail page and checking out. You got to flip that script and build out a product detail page that is the hardest working machine, that's the definition of doing more with less. You're spending more on your CX and your UX resources versus your top of funnel branding.
All right. So I want to get to some of these questions. There's some really good ones coming in. Folks, thank you so much for sending them in. Our folks that are watching us on LinkedIn, I'm definitely seeing your comments coming through. So please feel free to ask a question over there, and we'll see it. We'll try to get to it. First off, Colin Sebastian, he has the honor of being the first question today. He asks, smaller e-commerce sites gaining share seems a little counterintuitive relative to Amazon, Walmart, etc. What would you attribute this to? Sucharita, I think that kind of question was coming in when you were talking, so I'll let you take that, and then I'll make it a jump question for everyone else.
I mean, some of the biggest companies over the last few years have been the e-commerce platform providers supporting some of those smaller brands like Shopify, BigCommerce, and others. So I think that when you look at those numbers, probably a non-trivial percent of the smaller retailers are Shopify clients.
Mark, any thoughts on that? Any thoughts at all?
I mean, the only thing that came to mind is, maybe a sustainability play. With smaller retailers or smaller e-commerce players, you might feel that are, a bit more local, and there can be some negative backlash against some of the kind of big global conglomerates or non-US sites.
Yeah, it was crossed my mind, and we had talked about this prior to the call today, was that, I wonder if some of these geopolitical politic crosswinds of, impact the bigger companies more than they do the smaller ones. And I think smaller companies, at least, when I was with a smaller company that, grew, we just weren't impacted by stuff like this. We weren't going to have a Bud Light campaign against us. We didn't have to worry about certain things. We had tough competition and the like, but there were just some things we didn't worry about. So that could be one of the reasons. Simi and Sarah, any other thoughts on why it's a little counterintuitive that smaller e-commerce sites are gaining share versus the big boys? If not, we'll move on to our next question. I'm seeing blanks.
I don't know if I read it as gaining share, as just they had more optimism and maybe a better holiday than the bigger guys, right? So, I would layer on for the small guys, what's the tenure of these, right? Did they build their Shopify site and, explosive growth over 3 years? I don't know, just lots of ways to cut that. So I would just rate the positivity scale more to the size and experience and tenure of the retailer.
All right. Our next question comes from Frank D. Maria. He's asking, are there certain retail sectors that you're feeling more or less optimistic about, and why? I'll let anyone take that. I should guide you, shouldn't I? I should probably just look at Simi and go, just do it. Just answer that. You want to.
I would just say quickly, and then I think Sucharita looked like she had something a lot more intelligent.
Sure, she's going to get in on this.
So I'll go quickly, and then I'll pass the mic over here. Listen, I think it's very easy to say athleisure and to say beauty as being constantly just strong sectors. And I think that this might sound absurd, but I think that one of the most disruptive forces in retail over the last decade plus has actually been off-price. And that may or may not sound ironic because they have very little technology to them, and yet they've been disruptive. So I think like those are 3 high-level things I would say. But I do want to stress the point that I was making before. You can win and lose in any retail sector. And so that's what we are seeing. Like, I think it's very easy to fall back and cluster, but I want to stress we are seeing companies in every single sector see revenues go up and companies in the same sector see revenues go down. And so while those are, if you had to be born into a specific retail sector, sure, I think those are the 3 that I'd rather be born into, so to speak. But that doesn't mean that I'm going to be given a gift if I am, and it doesn't mean I can't win if I'm not.
Right.
And I'll jump onto what Simeon just said. That's so important for everybody to recognize, because I'll often, people will look at this data and they'll be so critical of it. Well, my business isn't doing that way. And it's like, well, that's because there are 1,000 different stories in each data point. And, there are, kind of an overall story does not necessarily mean your business is tracking with the overall narrative of retail. Now, what I will say, though, is that the overall narrative of retail right now has, oddly enough, the grocery sector on fire. It's been on fire since the pandemic. It continues to be on fire as a result of inflation. Now, is lower inflation going to temper it? TBD. But for now, that sector has seen kind of a golden period. I don't think it's ever seen before. The restaurant sector also is doing amazingly well. And I would argue that the restaurant sector is a really interesting one, because that's the one that has puzzled me the most with this whole narrative of, kind of consumer sentiment and, kind of negativity about inflation. So if I just, kind of the most discretionary way that I would argue that you can spend your money, other than maybe buying a Louis Vuitton handbag, is going out to eat. And yet we have seen the restaurant industry at double-digit year-over-year growth rates. It is the highest ever, and on top of inflation, because they have inflation and people are spending 5 to 6% more than that eating out. And that's my question, is if you're so distressed, who's eating out? Maybe people aren't as distressed as they say they are.
Is that just wondering about that, because you're absolutely right. It does seem incredibly discretionary, but it also seems like, is it still kind of pent up demand? Although I kind of think that's less and less an excuse now that COVID's kind of been out of the mainstream consciousness for a while. But it kind of feels like, it's just growing much faster than one would expect. I can't quite maybe it's experiential. It's cheap experience. I didn't go to Disney World, but I took my family out to dinner. Maybe it's something along those lines. Does Synchrony have any thoughts? Go ahead.
It was like people are going to Disney too.
Yeah, that's true.
Yeah,
that's true.
I would just want. I mean, it's what's going to happen with the housing market this year, right? So if I was in the furniture business or the home business, I would really like the home industry to turn around so I could sell some furniture.
Mm-hmm.
Because when people aren't moving, they're not buying furniture, and
true.
Maybe that gets to the discretionary fund. We look at millennials and exennials, et cetera, that don't have the cash to buy a house. So
yeah, there's probably also some linkage between furniture and the pandemic, because just 3-4 years ago, people were refurnishing their homes because they were spending so much time there. So you buy a couch, you plan to keep it for maybe 7-10 years. It may be a little harder to sell that again to somebody who just went through that process.
Especially if you bought a couch during questionable
Did
quality.
someone here do that?
Questionable supply chain. Okay.
Yeah. Okay. I hear you. All right. The questions keep coming in. Thank you to our audience. This just makes it so much more fun. Dana Schwartz, she's asking, volatility in pricing, continued promotional marketplace while trying to remain on brand, full price margin positive is a continued challenge. Will we see a material shift? Let me reread that, because I think I didn't quite read it right. Dana Schwartz says, volatility in pricing, continued promotional marketplace while trying to remain on brand, full price margin positive is a continued challenge. Will we see a material shift? So I'm taking that, trying to remain on brand, full price margin
Sounds
positive.
like promotions discuss a little bit.
Yeah, that's how I'm taking it. Yeah, promotions discuss. The holiday was seeing, everyone said, we're not going to discount as much. Everyone discounts. I guess no one was going to spend and everyone spent. So I guess everyone's not telling the truth. So yeah, promotions discuss. Simeon, it's on you.
Sure. And Sarah will probably have some really interesting perspective here as the operator. But I think from my side, so from my team side, promotions are obviously a very important part of the ecosystem when they're planned. They're less ideal when they're reactive, but it doesn't mean you don't have them. And so I think that figuring out, and this is an easier said than done thing, figuring out what the cost of your dollar of revenues today is tomorrow is effectively the question of how much of that promotional drug are you willing to absorb. And so I think what was fascinating was it felt like promotions took over from 2008 until 2020. And then in 3 months at the back half of holiday 2020, because of no inventory, brands retook the entirety of pricing power. But I think we have to figure out what's pricing power and what's price elasticity. They're two very different things. If you have no inventory, if units come down, you automatically get a lift in price. That's not pricing power. That's just inventory scarcity. Pricing power is the ability to sustainably charge a higher price. And so I think that figuring out who you are as a brand, certain brands are obviously going to be more or less promotional, but to the extent you can, don't be reactive, right? That's again, very easier said than done. And you're going to have to be, because if you're taking any sense of fashion risk, then you're going to have to be reactive. But no, I'm optimistic that the brands that have pricing power and didn't simply see higher prices because of price elasticity will be able to retain some of this pricing. The question is, do you have, as revenues slip, to Mark's point, if you're not buying that extra couch, are you not buying it because you need a better deal and therefore the brand is going to give it to you, or are you not buying it because you're sitting on it and you need to wait a little bit for that replenishment to kick in, and then you'll come back at full price?
Got it. Any other takers on that? We got a bunch of others. Going once, going twice. We're moving on. Brendan Royale, he asked, for the first time in a long time, we are even seeing the luxury sector experience a business turn down. Seemingly no segment of retail is immune to the challenges of 2024. The question is, what can retailers do to build a more resilient, adaptive, customer-first, product-centric operating model in light of all the competitive and macroeconomic forces? Sarah, do you want to try that one? What can retailers do to build a more resilient, adaptive, customer-first, product-centric operating model in light of all the competitive and macroeconomic forces?
I have the recipe right here if anybody would like to write it down.
Very good. Well, I've got a notepad ready to go.
Okay, first. So one, I'm going to go back to what Simeon said about luxury, right? Cores down, coach up. Like, again, it's things within there. Celine's going to have a hot year, and then, Vuitton's going to have a hot year. So it's, what's the story behind the story there? I think it's again, how closely are you listening to your customer and the signals they are sending you? Brands are increasingly meeting customers in social and in your media channels. Search is how they find product. The product page is where they, buy the product. Like, are you looking at those signals and managing every bit of the operational throughput from there? I think the way it's the customer is changing, potentially change the economies of scale in terms of KPIs as we've managed them for the last, 10, 20 years. Shifts in AOV, probably we're going to see a decline in AOVs, an increase in transactions. What does that mean from a macro? But your customer is giving you the signals, and your data science teams, you should be leaning on them to predict the future.
If I can jump in on what Sarah
Jump away.
said. So I do think, if there was a formula, it would be many tons of great execution, and as Sarah said, it's just, the answer is going to vary for every business, for every line of business, business unit within a business. And it is about looking at, doing an audit of, from bottoms up and top down. What are your numbers looking like? Where are there opportunities to improve? Because, kind of resilience it's not something that it's like there's no silver bullet for it.
Right.
It's great execution every single day. Your customers are telling you when you're not executing well. Many of your employees are probably telling you when you're not executing well. Are you acting on those challenges? And many times I don't. I mean, how many times do all of us, kind of issue feedback or make a complaint? And does anything actually happen as a result of that? Like, every one of those pieces of feedback is an opportunity to be more resilient and help the experience for future consumers.
I think one of the things I learned as a retailer many, many years ago, and I'm no pro by any stretch of the imagination, but one thing I did learn is that marketing departments oftentimes will exaggerate or not fully understand the products they're selling. Then you create all kinds of problems in customer service. And you can go to your marketing department and remind them multiple times about, hey, you need better schematics, or you need this issue taken care of. And they don't do it until you force them to work the customer service phones for a week. Then all of a sudden, the schematics appear correctly for faucetry. Then all of a sudden, products are described right. Return rates drop. Customer inbound calls on products drop. If you're looking for a specific tip that worked for me many years ago, it's part of the new cruelty that we had at my previous employer. But it worked. So if you're looking for something specific. Now, we have another question here, unless you're smiling. So I don't want to leave you hanging here, brother.
He wants to work the phones. He can't wait. Put him on the phones.
Yeah. Yeah. Everyone in our company had to be able to take care of a customer. That was it. It didn't matter who you were. And that's how we felt about it. And it definitely showed improvements. It had some grumbles at first. All right. And I love this question from Tim B. He goes, do you have an opinion of the impact we may see from companies embracing return and resale programs like Patagonia or Yeti? With the new generation of shoppers interested in sustainability, thrifting, etc., is this an area of expected growth and shrink management? So it's a returns question. Now, side note for the audience, I had a returns question that I posed to our friends here, and everyone's like, "Man, we don't want to talk about it." And so Tim asked it. It's on the agenda. Let's talk returns. Simeon, I'm just going to pick on you now.
Is it a returns question or a resale question?
It's a returned retail. It's a return resale.
Okay, I'm reading this as a resale question. Okay.
Alan is trying to be his own marketing department, telling a story that doesn't exist, trying to take a win where he doesn't have one. That's what's happening here. Pretending like he got his question in. Anyway, so Listen, I may have a very different view here, so I'll say it, and then would love to be completely challenged on this. I said it before. I really believe that this notion of an activist consumer is much louder than it is real, and I think that there is a role for this. And I think resale obviously is listen, it'd be great if the world embraced resale. I remember there was a time pre-pandemic or beginning of pandemic when the view was everyone's closet is going to be a third full price, a third resale, and a third rental. I don't know what your closet looks like because it's blurred, but you can't see mine at all. It doesn't look like that. So I think that I love that we are collectively as a race embracing the importance of the environment. If you ask me, do I think it's a huge revenue influencer? Has it moved a demand needle? You haven't seen that yet.
That's kind of my gut feeling on it too. I mean, it's just kind of what we hear here. Sucharita?
I 100% agree. And that the statement, it's the notion over the actual execution. We did a segmentation of green consumers around the world at Forrester. And what we found is that in the United States, it's about 15% of the population. That's what we'll call active greens. Those are people that actually put their money where their mouth is, and they will actually purchase more expensive products because it's more sustainable. The other 85% will not. And in fact, about 22% are hostile to the green notion. They don't even like the messaging. They think that it is bad for business and they want no part of it. The middle is where everybody hopes we can change. But guess what? They are what we call dormant and convenient greens. What that means is that they don't want to pay anything more for a green product. So if you can find a green product, message it, and price it the same, you'll win. But where you end up with is a bunch of greenwashing. And then you end up with a cycle of greenwashing leading to skepticism, leading to less belief in, kind of sustainable claims altogether. And where we end up, by the way, is the growth of these groups like the Buy Nothing movement, which are all about I can't trust anything, so I'm just going to start borrowing things from my neighbors, which is about the reduction of consumption overall.
You could take the made in the USA question and the answers would exactly parallel.
Huh, interesting. Yeah, I like that. Mark?
Yeah, I just think it shifts across areas as well. I mean, we have, ethical investing as a big trend that, if it doesn't have the returns, it's just not going to be as favorable as other elements, which Simeon could probably comment on more than me. But, I feel like in those areas, we've seen lots of different financial products that are, promoting the environment, and, they just don't get the headwinds because the rewards aren't as great, or the user experience isn't as great. So I think we do need to be cognizant of that, but also I think there is an opportunity here to relate to the customer and to build a better relationship with the customer through these sort of initiatives. I'll give a personal anecdote. I had a jacket that was about 10 years old. The zipper broke. I brought it into the store. They sent it into repair because they don't want you to just waste clothes, right? If it's like a simple repair, they'll just repair it for free. So that's something that can really build kind of that relationship and my trust in that brand and my wanting to, buy new items from them as well. So I think when you factor that sustainability play into the equation, that's really where you can see, a greater customer experience and a greater relationship with your consumers.
Awesome. We have a couple more questions. We're getting close to the top of the hour, so we're going to go quickly here. There's no way I'm skipping this question. Everyone's talking about AI. I want to show the clip of Jason Goldberg and what he had to say about AI in retail for 2024. Rob, would you play that?
What do Temu, Shein, and Amazon have in common? One thing, none of them have merchants. Right? And so you're wondering what the big impact of AI is going to be on commerce. AI impacts a lot of different aspects of commerce, but the one that you need to pay the most attention to is AI is replacing the merchants. All of the most successful retailers this holiday season do not have merchant princes like Nikki Drexler picking the popular items. They're not publishing catalogs of the best toys and having those toys wildly oversell. The biggest, most successful retailers in the world are all using data and AI to decide what to sell and what to offer to each consumer. And that is working very well.
Oh, Simeon, I know you want this one.
This isn't fair. If you can't talk about AI, have Jason here, not at least have like a Jason bot to reply to whatever we're about to say.
I spoke to Jason about this. He's probably going to private message all you guys about it, but go on, have at it.
So I think what Jason is saying has a lot of merit, except for the fact that what AI is doing from the companies we're talking about is replicating the merchants of other companies. And so at the end of the day, until we can do what Sarah described and literally just use zeros and ones to predict demand, what's happening is there are very large businesses with big merchant discussions. I don't know if there's a company with a giant swoosh on it that would probably disagree here that they don't have a creative team that gets a huge focus inside their offices. And so I think that it's just important. Again, I started at one point saying TJX and the off-pricers are the most disruptive force in retail. And they're the opposite of all of this. And they're all about merchants. And so I think, and they're also buying other people's mistakes. But I just think we have to appreciate AI does really well in a world where someone else is paying for a lot of creativity and merchandising for them to replicate.
Yeah, you'd agree with that, Sucharita, right?
I think it's an overstatement to say that AI is going to replace the merchants. It may be able to help some merchants at some moments in time. You saw it in the survey where there's, kind of some portions of, kind of product detail enhancement or whatever that may be AI generated. There are examples like IKEA and Adidas, I think, have, kind of put their entire back catalogs of visuals into like a Midjourney-like tool to see if it could come up with some new idea. But is that going to actually be any design that we see commercially sold? Probably not, but maybe it's a brainstorming tool more than anything. And that's not something to be dismissed, but is it disruptive? I think that I don't know how disruptive it will really be.
All right, we are.
And Alan, I will say, and I don't know that Jason would disagree with the stuff we're talking about, but I will say it is worth acknowledging how large and how fast Shein became, and then all of a sudden a competitor came up in the middle of nowhere, and now we're talking about Temu. Like that's what they can do; they can replicate, but you still do need to create.
What, 10 billion? I mean, not exactly insignificant. I want to get to the one last question here. And this is from Catherine, and please forgive me if I butcher your name, Chiroko. She asks, there's been talk that 2024 will be the year of branding versus performance. She says this was a key insight from the latest Business of Fashion State of Fashion report. She'd like to know what your thoughts are. What do you think will happen in terms of increasing branding efforts across retail brands? Sarah, then Mark, what do you guys think?
I'll say in line with the earlier part of this conversation, this year has to be about operating, right? Again, you don't lay off 10% of your staff and say you're going to invest in brand. So to expect that branding will be funded from what and performance can just kind of scoot along, I think that's unrealistic. That being said, again, going to the shrinkage of the funnel, the acknowledgement that the brand is built above, not on the site, and the transaction is in the website or the store being the transaction location. I think
it falls in line with what everyone was saying earlier. This is the year of the operator.
Nobody laid off. Nobody laid off 20% of their staff and went and bought a Super Bowl ad the next day.
Exactly right. I think there's agreement here. Anyone else want to jump on that? Yeah.
I'll say one thing on that. I think that if I'm a well-capitalized business and I'm listening to that, I am salivating. Because that is how I take market share. That is how the big businesses have their opportunity. And so I think there's an interesting dynamic of the performance versus the branding when you're counting your dollars, because if Nike's listening to that, they're saying, well, then I guess it's my day because I can pay for the branding. And so I think there is an element where you need to focus on it. And to give you a quick shout out and pitch for your next week's webinar, I don't know who saw an interesting Snoop Dogg ad, but that obviously was entirely focused on marketing, and I'm sure it'll come up next week. on the amazing webinar with Solo Stove. So I think there's an element there of figuring out where you have to be careful. I obviously agree 100% where the dollars really matter, but just know that there's someone else out there that is well capitalized that will take an opportunity to make that brand investment.
All right. Well, with that, we are slightly past our time, and I want to be respectful of both our speakers' time and our audience time. Sarah, Mark, Sucharita, Simeon, thank you so very much for joining us today and putting all the effort into this. I really do appreciate it. For all of those who are listening to us, don't forget you can download the report that Sucharita presented at the top of the hour. We also have a good report from Synchrony. I'm sorry we didn't get to go into that a bit more, but that's worth taking a look at. With that, we will see you in a couple of weeks. I'm Alan Dick with CommerceNext. Have a great rest of your week. Thank you so much, everyone. Bye-bye.
Bye, everyone.
Thanks.